Hello friends, this is Raj Sastry from Raj Option Trading. Today is March 27, 2022. Hope you're all having a good weekend. So let's take a look at top medical device stocks. I love many of these names because they've been doing very well consistently. Let's take a look at few of these and go from there. First we got Thermo Fisher. Thermo Fisher is absolutely a leader. They are doing very well and it's one of the top rated companies. And then you got Abbott Labs. Abbott Labs off late it came down. Could be a good time to buy Abbott Lab. It's a consistent performer. And then you got Danahor. Danahor is a very consistent performer. They've been doing great, just like Thermo Fisher. And then you got Intuitive Surgical. As many of you know, doctors need robotic guidance as they conduct the surgery. Intuitive Surgical has a best device. It's a Da Vinci system. They can help the doctors and surgeons exactly where to make the incisions and what portion to cut. And they're very good in guiding through their laser, their robotic technology. And then you got Stryker. Stryker has got its groove back off late. It's been doing very well, and this is a turnaround play. And then you got Edward Lifesciences. It's something similar to Intuitive. They also have robotics, and they are doing very well in the medical device space. One of my absolute favorite stock, along with Intuitive Surgical. Then you got DexCom. DexCom is a leader in the continuous glucose delivery, and these guys are doing very well. As you all know, there are so many people with diabetes, and you got systems like DexCom to monitor the glucose levels continuously, and this is one of my favorite stock in that area. And then finally we got Agilent Technologies. This stock has been battered and pulled back pretty hard. Could be a good time to buy some Agilent Technologies. It's a great player and it helps you look good with your dental and the teeth. And they got famous Align product here. Helps you to look good, especially makes your teeth look good. So with that, let's jump in and look at a few of these names here. Look, from a chart perspective, we got Abbott Labs here. Abbott Labs has been coming down off late, as you can see here. Nice downturn. Now it's trying to turn around, as you see here. Now on the balance, volume is also trying to go higher. At this time, given RSI 47 indicates stock is sold off. I'm a buyer at these levels. Look, it's trying to take on its I think it's a 50-day moving average here. So this can slowly turn around and make these moving averages as its support line and go higher. So that's why I like Abbott Lab at these levels, especially it's a great player. Look, there's a pattern here. Sold off, went higher, sold off, went higher. This time sold off hard, it's trying to go higher. So it's a good time to buy Abbott at these levels here. And then we got Intuitive Surgical, one of my absolute favorite. Da Vinci systems, robotics helps the doctors and surgeons, especially around the surgery, where to make incisions. Look, stock got battered here. Anytime there's a COVID related fear, folks will not go to hospital, and that's when stocks like Intuitive Surgical will come down because elective surgeries will be postponed. At this time, it's slowly going higher. At this time, I think it's a good time. Look at the on the balance volume. That's also going higher. At these levels, I'm a buyer of Intuitive Surgical. Then you got Agilent Technologies. Look at the drop here. Big drop, again big drop. It's trying to go higher now. At these levels, I'm a buyer of Agilent Technologies. It's one of the best companies in the teeth area, dental area, to make your teeth look good. And then you got LabCorp. Look at the drop here. Big, huge drop here. Nice consolidation pattern. Now it's trying to go higher. So at these levels, I'm a buyer of LH LabCorp. It's one of the great diagnostics play. They help with the laboratory testing of your blood and various other vital elements. It's a good company, even though stock is dropping off. Look at the on the balance volume, that's going higher. That's why I'm a buyer in LabCorp here. All right, let's look at a few more here. Thermo Fisher, look, RSI is 55, middle of the road as you can see here, and stock has been coming down off late, and now it's trying to go higher. On the balance volume is also go higher. Even up here, I think Thermo Fisher is a great one. If you have a retirement portfolio, buy some Thermo Fisher in your long-term portfolio. You will do great. And then you got Danahor, something similar to Thermo Fisher. Look at the RSI 57. Stock has been doing great. Coming a consolidation pattern, came down, one more consolidation pattern. Now it's trying to go higher. On the balance volume is also going higher. So at these levels, I'm a buyer in Danahor. And then you got Stryker. This one is a choppy. I love this one, especially swing traders will love this stock. Up, down, down, up. Look, there's a nice pattern here, and right now it's trying to see where to go, and it's right now it's up as you can see here. I say wait a little bit, it will come down, then you can buy. This is one of my favorite swing trading stocks. It will do great. And then you got DexCom, one of my favorite companies here, especially with a lot of people with the obesity issues and issues around diabetes. This company can do very well as you go forward. Look, stock got battered here. Now it's trying to make its way higher. RSI is 63. Still lots of way to go higher here. Look, on the balance volume is going higher. I'm a buyer of DexCom at these levels. And then you got few more here. PKI. PKI is also a great one here. Look, nice consolidation pattern here, and it's trying to bounce off of its 200-day moving average, using it as a support level. So at these levels, you can slowly buy some PKI. Look, stock is battered with the RSI 49. That tells you stock is oversold here, and on the balance volume is slowly trying to inch higher. And then you got IQV. Again, stock is down big time. Consolidation pattern trying to go higher. On the balance volume is also trying to go higher. With the RSI 48, this is completely sold off here. You could buy some IQV here and go from there. And we got Massimo. Massimo is a different story. As many of you know, this company bought a consumer electronic company, especially around audio. The stock got battered big time down. And look, after the earnings, they announced the acquisition. Investor did not like it. Stock came down, big gap down. Now it's trying to slowly go higher. At these levels, I think it's a good one to slowly buy here. They can do very well as you go forward. And I think I'm a buyer here. And then you got LabCorp. LabCorp is again a great one. Look, stock is sold off, trying to go higher. I think we talked about this. It's a good one to buy at these levels here. All right, so now let's look at profitable medical device stocks. At these levels, Wall Street does not have patience for non-profitable companies. Let's look at profitable medical device stocks, so you can buy these companies slowly and beef up your portfolio. So as you can see here, I sorted this by market capitalization. Top of the list, we got Thermo Fisher, one of my absolute favorite. And look, it's got a nice 20% net profit margin. That tells you company is profitable. Look at the sales growth here, 22%. That's good. They're growing their top line and focusing on their bottom line also. Nice debt to equity level, not too much. I like it. And RSI is 55, middle of the road, still long way to go. Stock is in the correction territory, 15% down from 52-week high. Look at the amount of cash. They got $4.4 billion cash. You don't need to worry. Lot of free cash flow. Company generates money. Nice financials. Overall score is great, 87. Overall, I think it's a great one to buy up here. This company will do very well. And then you got Abbott Labs. Abbott Labs, as you can see here, it's one of my favorites. And look, this stock is sold off here. Look at the RSI here. RSI is 47, tells the stock is sold off. At these levels, I'm a buyer of Abbott Labs. Look at the profit margin, 16%. And look at the cash. They got $10 billion cash in their balance sheet, and they generate a ton of free cash flow, $8.6 billion, and financially very stable with a high score of 95. I would buy Abbott Labs here. It's a very good stock. You're buying it at a sale here with the RSI 47, indicates it's sold off here. All right, now let's look at Danaher. Danaher is also one of my absolute favorite, along with the Thermo Fisher. Look, nice 22% profit margin, more than Thermo Fisher's profit margin, and they're also growing nicely. Look, 32% sales growth. Top line is growing, bottom line is solid, and even debt perspective, they got less debt, 0.5. That's a good. Anytime it's below 1, it's better. Lower the better. And look, they got ton of cash here, $2.5 billion cash. They generate a lot of free cash flow, $7.6 billion free cash flow, trailing 12 months, and nice overall score. So this is a keeper. You could buy this and forget about it. And then you got Isrg. It's one of my absolute favorite when it comes to medical robotics. These guys help doctors and surgeons, as we talked about. Overall score is 80. Look at the net profit margin. One of the highest here, 30% net profit margin. And look at the top line sales growth, 31%. One of my absolute favorite here. You could buy this one here. Right now, RSI is 52, middle of the road here. Look, it's down 22% from 52-week high. That tells you the stock has got a long way to go. They got a lot of cash in the balance sheet, $4.2 billion. A lot of free cash flow here. And it's one of the best stocks to buy, especially at these levels here. And then you got a few more. We'll not talk about all of them, but I will point out a few ones so you can take a look. Look, we got here Agilent Technologies. Look at the performance here. It's done great in last 5 years. Look at the RSI. Stock is completely sold off with the lower RSI here, 44. And look at the profit margin, 20%. You could buy the stock here. It's a great one to buy here. And then we look at one more here, one of my absolute favorite. Look at DexCom, continuous glucose monitor. As you see here, they have done great in the last 5 years. Look at 532% here, one of the best in this list here. And look at the profit margin, 6%, not too high. This company is getting its groove back. It's competing effectively with the Abbott Labs in this continuous glucose monitor. You could buy this company. It's a great one to buy here. And as you can see here, we got a few more here. Cutera as an example. This company is a little company, just under $1 billion. This company stock has been going up and away, mainly because there is a high short ratio, 11%. I would wait for this stock to settle down before I put my money in there. And then you got Massimo. We talked about this stock is completely battered here. Look at the RSI 43. Look at how much it came off from 52-week high, 50% down, highest in this list. At these levels, I'm a buyer of Massimo. You will do great. And along with LH LabCorp, I also like DGX. Whenever these stocks are down, they always come back up nicely. But I say probably you can wait a little bit. RSI 63, it's down 17% from 52-week high. You could buy this on a down day. You will do well. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.